Okay, so let's move on and talk a little bit about AI and technology, which is something that no one can avoid these days.
Right.
It will be even more over us in the future, right? I mean, like, just really big picture. I mean, like, I try to be really open as possible. Like, what's your take on this AI technology in terms of the like long-term investment theme? Like, is it going to be with us for another like 5-10 years? And even like, happy to hear your views on this.
Right. So hard to have great confidence.
Yes.
Right. Because the world is changing so quickly. And while we can spend 3-4 decades in investment markets, the technology market grows and changes so quickly. But really, if we think about the last 20 years of our lives, technology has been a consistent underpinning. So I think the easy answer is yes. This technology focus continues. I think it matters. Now it tends to move in massive waves. I think we're in the part of the wave where the CapEx delivery is ahead. And now it's a matter of what do you do with it after that? And so short answer, yes, it'll continue. Long answer is for business models, it's now a question of how do you change inside of your business, inside of your government, how people work to use the technology. That typically takes a lot longer than it does to build the technology.
Okay.
So we think it's going to be continue to be the focal point, but it's going to be a slower process of change, because that's ultimately a very human thing.
Yes.
How do humans work is a slow change, but the productivity and the growth that can come from that are real. And we also think that that's a disinflationary force. So that's good news, because it should increase productivity rates and should suppress inflationary influences, which can extend as that's embedded into economies. It can extend that growth that we're currently enjoying.
Oh, interesting. And now I think we are quite clear to understand the potential positivities that are coming from AI and technology in the future, right? But what about the risk? I mean, like, there's always something about risk of like having all this like a cyber attack and things like that, right? Like, do you see a risk like also like coming into our way in terms of the financial market that we need to be aware of?
Yes. And knowing what those risks are always difficult. But I'd say one of the biggest things that we think investors need to think about at all times are correlation risks. And so right now, one of the bigger concerns that we have is that you have highly correlated moves in stocks. And portfolio returns are better when you have diversified array of idiosyncratic risk.
Yes.
And so while it's been positive for markets to have this narrow correlation, ultimately that's a fragility. Because if 7 or 10 global stocks start to have weakness, you can create something that autocorrelates. So we see that in the markets as an autocorrelation risk, which we don't like. And within society or within business models, as we frame more and more around large language models, our large repository of knowledge, which is viewed to be true, and you base actions off of that, to the extent that anything in that is not accurate, it gets consumed a lot. So one person's bad idea or misconception or one model's misconception can autocorrelate into the thinking of many different models. That's different than one person making a mistake.
Yes.
Right. So the risks for the exponential use of poor inputs is higher. So that correlation risk is something that we're thinking about. It's hard to know where that goes to. But the unintended outcome, or what can happen when things autocorrelate or self-fulfill, even if it's a fallacy, are a risk. The other risk is the energy issue that comes with this, right? And so even though the U.S. right now is probably going to see a little bit of a lean against the ESG component in the world, and this is a natural ebb and flow, the long-term direction is still very clear. Companies and industries are not going to change their long-term outlook given a 4-year regulatory change. AI and the heavy use of technology does require a lot of energy investment.
Yeah.
We expect a 30 to 50% increase in the energy needs in the U.S., and that takes a lot of investment. And having that done the right way, and both from an efficiency of delivering it and from a societal standpoint and from an economy standpoint, it's not free. And so hopefully this will actually improve the use of green energy, but it could actually have a negative impact of saying, just give me the energy, even if it hurts the environment. That'd be an unintended outcome.
Yeah.